Okay, question for you.
Hmm.
What is the benefit, or on the other side, the risk of working with a local lender versus working with a national lender?
Yeah. Well, so I think for the benefit, there are always benefits working with local lender more than with someone who is not local, right?
Right.
First of all, they might not understand the market well, because market is different state by state. Even could be, if it's a big state, it could be a little bit different on the northern part and south part,
Yeah.
right?
Yeah. Yeah.
But local lender will know the dynamics. They will know, and they care because they're here in our backyard, so we care about the relationship. Versus when someone is working at the calling center, they don't have a relationship, they don't really care. They might not know that we need to close the day we have the contracts, right? So
Yeah.
they might be more relaxed at that. You might not be able to talk to the same person. If it's a 800 number, right? Or even if you talk to the same person at first, and then when it goes to underwriting, then you're gonna talk to processor, then you're gonna talk to someone else. So it's always gonna be someone else. The big thing, especially with credit unions, I'm not trying to bash any of them, but they're from 9 to 5
Yeah.
and Monday through Friday. So
Right.
when are we writing contracts? At night,
After hours.
after hours,
Yeah.
and on weekends. That's what happens. True story. Last Saturday, I had guests over, and I got phone call at 9:30 at night that they were writing contract and they needed to submit it by 10 o'clock in the morning.
Yeah.
And I didn't know the people. I didn't know the clients. So I told them, do the applications, send me these documents, and I will get you that letter by 10 o'clock in the morning. So I did have people over, so I couldn't really work on it right then. And thank God they needed it
In the
next morning. But if they needed
Yeah.
it that night, I would, let my husband
Yeah.
deal with them and I would work.
Our
But I
friends and
actually
family are all used to it, right?
yes, but I sent them that pre-approval at 4:30 in the morning, and unfortunately they didn't get that contract. But it's just that's how we work, right?
Yeah.
Right.
Yeah.
We're into someone who is from 9 to 5, and
Yeah.
what else we have? Um, Also, the overlays is a big thing, and overlay is what big banks typically have. They're more restrictive guidelines comparing to actual guidelines of the Fannie Mae, Freddie Mac, for example, or FHA, VA. So they're gonna put their additional restrictions, and that could create a problem with qualifying, and someone might not be able to qualify because of those overlays. And big guys, they always more restrictive and they have more overlays.
Yeah.
Right.
So I think that's it.
Yeah.
Yeah, and I that's such a big deal in a market like ours, where I mean, if it's a buyer's market, it's super slow. It doesn't matter as much as it does now in our market when we have to get the best of everything on our offers immediately after hours on weekends. And the best, a big part of that is the loan qualification, right? I mean, that's absolutely huge. And a lot of times when we have offer deadlines, if we submit an offer that is like this nationwide lender and we can't get them on the phone to get a property specific pre-approval,
Or a conversation with the seller's agent, or
the sellers don't even want to factor that offer in when they have all these other offers with lenders they can get on the phone and confirm everything. So it's huge.
Yeah. And we had an example of, and this is what provoked the question. Evoked, caused, all of those provoked.
Yeah.
Okay.
All of them up.
We had a client that was from New York, and it was with a large bank, and
Mhm.
their lender was from New York as well.
They wanted
And
to stick with them.
they wanted to stick with
That's
him, so it's fine. The lender was licensed in Northern Virginia as well, or Virginia. And when it came down to it, we were 3 days out from closing, and we weren't getting the closing disclosure. And we were checking in with them regularly. Hey, what's going on? How are things?
Qualified,
Yeah,
well-qualified buyers.
perfect, yeah.
That wasn't an issue.
No issue with the buyer whatsoever. All of the updates were, yes, everything is running on track. Kelly would ask them specific questions. Everything's great. We got to that 3-day disclosure point where we had to have that CD signed, and they were nowhere near ready for it. And they're like, well, and basically to them, that
The
rule
settlement
of the
date.
settlement date was a suggestion, as you always say. It was a suggestion. They're like, yeah, it doesn't matter. We'll just push it back for the settlement date. And we're like, no, that doesn't work.
No, you're
So-
in breach of contract.
Yeah, so we had to, like, that day, we were on the phone with 3 levels of supervisors to get somebody
Yeah.
that would just get us this closing disclosure to get it signed in time so they could close on time. Because the seller on the other side of this transaction was not a kind seller.
They were
would
happy
take
to
the
take
money.
the EMD and put it back
Yeah.
on the market because they had plenty of backup offers waiting in the wings.
Yeah, so this is one of those scenarios where it's like that deadline, those deadlines matter.
Yeah.
We had another issue with a big
And
bank
that was
where,
a good lender. I mean, they were
They're-
good. They
they're-
just don't know when
Yeah.
they're not there local.
and it was the loan officer specific, being from New York. We had another big bank issue with another loan officer from out of the area that they could not approve the buyer and would not get us a denial letter in time for the contingency.
Right.
So they missed the finance contingency without the denial letter, and it moved forward because we had an automatic expire on that one. Luckily, that was when Kelly was getting into lending, and she was able to
Yeah.
pull that one out and save it. But we had 2 examples where the lender just
Yeah.
didn't care about deadlines. They didn't
It
understand.
was
that
almost
meant-
like once the loan officer knew, oh, my company can't do it, they didn't even want to take a call so that we could be like, we need the denial letter.
Yeah, and they didn't
you know.
care, they didn't care about the business reputation because they didn't work in this area.
Yeah,
So to me, that's where it gets really, really important.
yeah.
And it's that protection of that EMD that's huge.
And plus you're here.
Yeah, plus that.
No, I absolutely agree that those are great examples. I remember one where I saved the deal where also the bank, it was a condominium and the buyer, they needed to get the condo questionnaire, open some can of worms. But if condominium is, let's say it's a conventional financing and condo complex is on a Fannie Mae approved list,
Mhm.
us, for example, we don't need the questionnaire because it's already an approved list. But
Yeah.
not all banks are like that. So some are still required that. So
Yeah.
it did open that can of worm for them. But they came to me. I said, well, we don't really need the questionnaire because it's already on approved list. So
Yeah.
we were able to do the deal.
Right.
Yeah. And so it's just those nuances
That's
that are
right.
really important.
And that I can say when I had my license, it was with a nationwide company and I still worked here in the area. I was licensed in the area. But because of that kind of thing, all those extra overlays we had, it would hold things up that when we worked with you, I'm like, Tatiana doesn't have to do this. Even our appraisers, it's like it went to this pool of so many appraisers that would take them so long to get out here. Some of the appraisals were kind of whacked. And I'm thinking, Tatiana's appraisals aren't like this. I'm like,
That's
forget
another
it.
thing, if you work with, we have our appraisal, local appraisal, like we have our appraisal review department. So
Yeah.
it makes a big difference. And we have a lot of appraisers also, but each area has its own pool of appraisals. So we're not gonna send someone from Silver Spring to appraise house in Ashburn,
Yeah.
it's
Yeah.
gonna be local appraiser. And if there is an issue with appraisal, it doesn't go to a third-party company that is the turnaround time is gonna be very long and they don't really care because we have the department that will review it and deal with the issue and save a lot of deals this way.
Yeah.
That's true. And then the last point that is really special to me is the agent to loan officer relations,
Yeah.
right? Because we've been able to call you, we were here local with each other, and we've got such a great working relationship that we've been able to call you about situations that you know you won't even be helping with, but you help us and you help our clients. And you've saved one or two things for us just because we have this local professional relationship. And I think that is also something that's very important.
That's right.
Yeah, and sometimes, it's important, let's say they work with this lender and there's 3 days from the settlement, I could say, let me take over and,
Yeah.
maybe we'll have to postpone settlement, but that's gonna be a last resort for them, of
Yeah.
course.
Yeah.
The
Yeah.
first thing is just to get this deal through on time.
Yeah.
And sometimes you need another set of eyes or brain to, come up with a solution, definitely.
And I can tell you, our buyers have said, okay, we're using her for our next deal.
That's right. That's right.
Yeah. So
Okay.
that's it. You have anything else?
How do they reach out to you?
Yes.
Oh, yeah, call me at 571-245-3000.
That's right.
Right.
Call,
Awesome.
text, all hours, whether she's hosting or not.
Especially